Hi friends, let's start with the topic on charge and appropriation. So let's see the difference of charge and appropriation because it's a very important topic with respect to the entire partnership. Now what is a charge? The charge is something that is going to be deducted from the profit and loss account. But what is profit and loss account? We are still not aware and we are not clear. So let's discuss that in detail. So the first thing is that let's assume you are having a trading concern, right? So we prepare what? A trading account. So you have an opening stock, you have purchases on the debit side, you have closing stock and sales on the credit side. So you arrive at what? Gross profit. Clear? I repeat, you have sales and closing stock on the credit side, you have opening stock and purchases on the debit side, you arrive at what? Gross profit. Now this gross profit gets transferred to where? Your profit and loss account. In the profit and loss account, you have your other expenses like rent, salary, electricity, other administration expenses, and you arrive at the net profit. Now all these expenses are general in nature, they are not specific to the partner, right? Okay. So now you arrive at the net profit, and this net profit is going to be transferred. Instead of going to the capital account, for the sake of partnership, it will be transferred to P&L Appropriation account. The P&L Appropriation account will have the profit which is transferred from P&L, and then we have the other expenses like interest on capital, salary, commission, transfer to reserves on the debit side, and you have interest on drawings on the credit side. So these are the aspects which will be there in the P&L appropriation. So if you see IOC or interest on capital, salary, commission, then interest on drawings, they are all related to the partners. Okay, these expenses and income are related to the partners. So that is the reason why we are transferring them in the P&L appropriation, and then whatever profit is available for distribution, we distribute to the capital in the profit sharing ratio. So this is the thing which you should remember. That means when we talk about charge, that means it is going to be deducted from the profit and loss account. When we talk about P&L appropriation, we are going to take all these appropriation, whatever amounts I had mentioned, interest on capital, salary, commission, interest on drawings, these will be taken in the appropriation. So the charge is something that you have to incur whether you earn profits or losses, but appropriation is only when you are going to make profits. So charge is that you are going to incur these expenses whether you earn profit or losses, but when we talk about appropriation, it is merely distribution of the profit which is available. So please keep in mind two examples of charge are, for example, rent. The rent is paid, okay, to the partner, but still it will be charged because it is in an individual capacity, not in a partner's capacity. Same way, like I said, interest on loan also will be taken to charge, not to appropriation, because it is given, the loan is given in individual capacity and not in a partner's capacity. Coming to appropriation of profits, you have interest on capital, salary, commission, and interest on drawings. I hope you would have understood. So you have a trading account, you have the P&L account, then you have the P&L appropriation. So from the trading, you transfer your gross profit to the P&L. From the P&L, you transfer your net profit to the appropriation. In appropriation, you have these four items. You have an additional item that is transferred to reserve. This, the partners are decided to keep some amount back in the reserve, and then balance alone will be transferred to the capital account. So this is what is appropriation. See the format in page number 2.11 of your book, of the Garewal book, and understand the aspect of P&L appropriation.